Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, November 27th. Hope you guys have a wonderful morning so far. We got just a couple items to go over here on the economic calendar here, and the first two items will be on the HPI, otherwise short for Home Price Index. We'll start with the Case-Shiller Home Price Index. We look at typically two indexes on the Case-Shiller here, and this one that we're using here is the U.S. national one versus the 20-city one. Now, as you can see, back in August, we had a 5.8% year-over-year appreciation level in August, and it shrunk down to 5.5% in September. So what we're seeing here is, again, on a lot of these home price indexes, that we're still having appreciation, but it's at a decelerated pace, meaning that home prices are still going up, but at a much slower pace over time versus the higher rate as we were seeing before. They are starting to slow down a little bit here. Now we also got the FHFA Home Price Index. This measures home prices with conforming loan limits, conforming loans on there, which is the bulk of the properties in the United States here. And you can see here it had a slight dip, went from 6.1% in August down to 6% in September. So still both these are still at very healthy levels here. A lot of projections were between 4.5 to about 5% this year, year over year, and then next year some I'm seeing, they vary, but some the prognostications were showing that about 3 to 4% appreciation next year. So home prices are still expected to even grow next year. Again, just at a slower pace here. Now, last but not least, we got consumer confidence for the month of November. So our previous reading back in October was 137.9. Forecast for this month was 135.8. And it came in pretty much in line at 135.7. So it did shrink a little bit from October to November here. So let's jump ahead here to the headline news. Stock market is down. It's taken its cue, not so much from the data here, but really some comments that were made from President Trump in the Wall Street Journal yesterday. That came out, it was published late yesterday. And basically, it was this, they were feeling pretty optimistic about the meeting between him and the Chinese president on Friday at the G20 summit down in Buenos Aires, Argentina. And now with this comment coming out that it's highly unlikely, as he was saying, it's highly unlikely that nothing would deter the U.S. from raising tariffs in January, that he doesn't think a deal will come to fruition before then, and that he thinks they'll have to implement the tariffs in January. And that deal also could include iPhones, tariffs on iPhones, which of course, Apple's stocks are going down and laptops are being imported in from China. So again, those are all items that are on the table as well, and that's kind of hitting some of the, especially the tech stocks as well. So let's see how this is playing out on the with interest rates here. And as you can see, we are hitting up against this 50-day moving average. As the 50-day moving average is moving lower, and we're going kind of this sideways pattern, we're kind of reaching that ceiling by default. And we're still in this range between the 50-day moving average and the 25-day moving average. And as you can see, we were down earlier, almost testing that 25-day moving average and pulled back up. We're currently down about 2 basis points, which doesn't translate to any changes in pricing. But if you look at the stochastic here, we are in a level kind of an overbought position here, and could move to the lower. So chances of us moving lower are greater than us improving a little bit here. So again, this will be a pretty strong floor, sorry, not floor, a ceiling of resistance here, and can push us down further. And according to stochastics, we kind of need to get down further here. Same thing with the Treasury on the opposite end here. We got this floor of support here. It's been holding here. We got the 50-day moving average. We got quite a bit of room in between here. It's down to about 3.06 right now. And if you look at the stochastics, we're in an overbought or oversold position, and could rise upwards, so put pressure on mortgage-backed securities. So if you are out there and you aren't in any transactions from floating, or you're floating your interest rate from a refinance or a purchase, you might want to kind of look in at some point locking in, because it's, you might be able to wait a day or two here, but be careful as we have more room to the side of worsening for rates than we do for improvement here at this point. So just be careful out there. All right, so again, our rates are about the same as where we left off yesterday currently, but again, we have more upside to the rates getting worse than they will get better in the short term here. All right, if there's any other changes, I'll post on Twitter. You can find me on Mike Bjork. You can follow me there. Otherwise, you guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Thanks for bye bye.